Best people, how are you? Yep, so it's the dollar index. Dixie, Dixie, Dixie do. What the Dixie do? The whole game of this macro and this current macro environment is understanding the dollar. The dollar is a weapon. Like the military industrial complex, it is a weapon, but it is a geopolitical and financial weapon. It's one that's starting to feel a bit threatened. And when an animal feels threatened, it comes out charging. And this is what you've had. However, during this period, we have said countless times we've got to revisit and recap what was said and where we've stood on this and how it's played out. If you go to the end of day chart and we take it right up to the monthly, we have said that you are in a beginning of a major move for dollar bullishness, and we expected this low over here to not be overrun by the 7 trillion that was created, yes, printed literally for the world, the dollar did, during this period. In fact, this was a key seminal event there in the blue. Let me go back to the pink. We've got to have our TG pink and go a bit fatter because there's quite a lot of drawing on here. So this was the seminal first first upside break that occurred. The lows prior 2008, everyone in fear ran into the dollar. Then the pullback round about 11, and then you wound up, you stood, and then 14, 15 into 16, which led to the Shanghai Accord. You ran up and you started to set up this structure. You've seen me say this one many times before, but that this would be upside continuation. So with that dollar index, where was the target? 110.3. What have you got? You've got a shooting star roughly, and this is what we predict, a period of pullback. During this period, many people will say inflation we've won. So you are going to have recessional forces. They're going to reduce the amount of inflation because people are going to be poorer. Their salaries are going less far. They're spending more on electricity, energy, fuel, gas, diesel, everything, you name it, particularly in places like Europe, and as a result they'll be buying less, and so you will start to have some slight pullback on inflation. People will call peak inflation. Big mistake. There are many twos and fros. Once you've allowed inflation to become a big monster and you're wrestling it, just because you throw it to the ground doesn't mean the fight's over. It's like fighting a honey badger. It'll be darting for your testicles the next 5 minutes and gorging on them, and you will go from thinking you've thrown it off you to squeezing your hands between your legs in mortal pain, and once you actually have to shoot it through the head. Once it's decided it's fighting you, this honey badger doesn't go away, and that is inflation once it's been properly unleashed, which is why you should never actually fully unleash it. But of course they did. You know the full story, starting from the quantitative easing, starting from the excessive lending to ninja loans, starting from the dot-com boom, all part of asset inflation, running the interest rates too low during the Greenspan era, due to the fact that globalization, etc., which now being deglobalized. By the way, Biden's doing all sorts of licenses now for China to get chips, sanctions that won't see chips be allowed. You have to get a license if you want to do anything of an AI chip nature that goes to China. So this is only going to continue. So we're going to go and see trade being compartmentalized and deglobalized. This bifurcation is not just China, Russia, one side this, but it's a large part of it. So all of this is happening, and this has now made target on the macro. So a pause, something along the lines of this orange line, is possible. It's not the only scenario we have, but it's a pullback, a wind up, and then we go again. There is going to be a dollar super spike, but it's going to be put on ice now, and no one's going to see this coming, because it's going to be recessional feel. We're going to start getting colder in Europe. Again, as I mentioned, those energy bills are going to be higher. Purchases on other things are definitely going to be dropping. So this is the macro. Don't forget, you're in a channel here. This is something we've drawn for an extended period. Many people thought we were crazy when you said you were going to get above 100. That was such a key level. There. Just a spike through the nose there. We had a short spell through it just before the 7 trillion got printed there, and then we smashed it there. Now what do you look at? You're seeing 110. Look at that localized high. When last were you there? Wow, that was some time ago. It's probably going to come up in this channel that it's going to happen, and it's going to be tied to a failure of the euro. The euro is the biggest part of this. So this dollar index is 52% euro. So this pullback, the small shooting star on the monthly, it's a small shooting star on the monthly. It's not too big. is going to be the thing that will have a little bit of a down leg associated with it. So there you can see it small. I should do a little square around him so everybody knows where we're pointing. But even as any shooting star, though, generally points to a rest of some sort, and you could have a similar measure down. You could have even if you have a hammer next and you don't stay down for too long, you can still have a wick that can take you down there on a monthly level. So this could be a period of benign progress decay. That's what we call it in HVF method. Go to themarketsniper.com and understand the principles of HVF method to a far higher degree. That which you learn here is for the cheapskates, those that truly grow, truly invest, and there's a lot more behind it. Watching it being implemented and realizing that this was to come is very, very important. You've got to remember, when the dollar was racing up like this, a lot of people calling 120, 150. We said, no, our target's 110.38. We don't look too much beyond that for now, because that's going to be still on the smaller time frames fairly unpleasant if you're positioned for the dollar long. So let's go to that other chart again now that you're reminded of the macro in terms of that. So what happens in this environment? Well, I'll tell you what happens in this environment. Bitcoin is going to get a rally and everyone's going to start back on the pristine collateral narrative. Of course, equities will get a rally. You can see now that we've dropped to this chart. It's a fairly, so far this month, it's still a fairly clear-cut rejection that has occurred. There it goes. So it's quite a clear-cut rejection that has occurred, and you can expect, it's not unreasonable to expect an element of follow-through to the downside for a while before maybe you get some support and you start going back up. So it's not to be sneezed at, and that's the value of targets. We aren't putting on dollar long targets, dollar dominance trades at this point in time at all. And in actual fact, those that were strongly sized actually took off some of it off the table at the 110.3. That means you will have sold the wick high, guys. Let's just put that in consequence for many of the people. Now, the one thing that, as I was highlighting, is a large part of this is on the euro side. 52% of this is euro. So it's amazing to me, really, really amazing to me, that our dollar index target also coincides with the pivot around the parity level of the euro USD. And the amount of times these sort of events occur is exceedingly common in HVF method. You get these true natural points of events. So if we go pivot to the euro USD, you can see this is quite a rejection candle with a big wick and trading up. This is on the monthly level. What if I were to just show you all the annotations that we've done on this guy and take it down a drop? And you can see that big head and shoulder target run, overshoot to the parity, and don't forget, lest us forget, are inverted. The last key structure that was an inverted HVF funnel there, trade down, it targets also confluence perfectly with the parity level that you ran here. You would have closed on that target. Note the first time you pushed through and you just did a short wick on a weekly, no, daily, my apologies, not even a weekly, a daily. See the time frame up here, daily dip through. You've come back and you've had a more sustained period where people start to get more used to a euro number actually being similar or even slightly lower than a dollar number. That's the parity level. But now you're getting a clear move away. You're getting a clear move away. So this is progress decay. You're getting a couple of marginally lower lows there, and there. So that points to a spell of relief for the euro weakness narrative, which is also a pullback on the dollar dominance narrative in the DXY, where the euro USD is a large part of that. However, you are going to get pullbacks also on the USD JPY and say the likes of the Korean won, but less so in my opinion. In other words, the worst currencies right now for this period and generally for this entire FX macro environment, hence why we're the ones to have coined the Asia FX crisis. The Asia FX crisis is going to be particularly unique and are far more compromised than most people realize. We don't watch Korean news. We don't watch Japanese news. We hear what's going in Europe when we're in America all the time, when we're in Europe, when we're in Southern Africa, whether we whatever. It's sort of our heritage nation of so many sorts, and we almost revel in their bad news and what's going on there. And many of us live often in Europe or in the UK, close to Europe, etc. So we over-covered in the Euro news, and this creates hypermorbidity about the Eurozone's problems. It's undoubtedly a currency designed to fail, and fail it will, but it's going to be failing and coinciding its failure with a whole base of other currency related failures, because they've all kissed the same leper, which is global over-indebtedness synchronized into a larger collapse so that they can bring in the central bank digital tokens. So watch that Euro rally. Don't buy it. Don't believe in it. So we warned about a Judas rally. I'm seeing some guys bragging about making money on the long side on crypto, for example. They are actually trading counter trend right now. Nice big sums, all very good. We could have taken those trades too. Not interested in them because they can turn suddenly. But a thing like this dollar dominance resting, and we don't want to overtrade inside each ebb and flow. We want to bias one side. Primarily, this is short season. And when you counter trend trade, it can suddenly stop and you can get taken money off. But right now, on the long side ETH, on the long side BTC, this guy's made quite a bit of money. Congratulations to him. But does he realize he's counter trend trading? He's trading on the long. Now, I have no longs on crypto and I have no shorts, but I'm waiting to short because I'm continuing to bias on the short side. But this could be a longer period spell. So they may have had enough time to do that and to make some good money and trade up. But it's a dangerous one. It's so much simpler in trading when you understand the macro. The macro is bulk of risk to the short side. Now, yes, there's a lot of capital that is sitting on the sidelines, though. Many people will point this out in funds and various other things. So you can have quite violent rallies. However, it's dangerous to trade outside of the predominant trend overall. And we are looking for a dollar super spike, and we're going to stay on that one. So we are never going to go long in the rallies. Here's the USD Korean won. Shown this one countless times. I think apart from the yen, I think in terms of that super spike, this one will at the very end outperform the yen. But initially it's the yen that's the front runner. But this structure is very, very good for a major super spike, but also it's reached a point where it probably needs a pause. And it's going to pause during this period that the dollar rests. That is your structure. Squeezy, that Korean easy. The kimchi mafia are going to feel the heat. And you know, that's kind of the prediction. So the Asians are particularly weak is one of our key points. And you know, we've gone so far as to say you're going to have a halvening. This was beginning of the year when on Real Vision, but you can see on the shorter time frames it is hyper extended. There's your rising wedge squeeze, and inside of that you've got a further wedgy squeezy where you popped out the top and you've had a real blow off run. So this times perfectly with it. So you're having the Euro USD messing around either side of parity, 0.98s, 99s, 101s, now reversing at the point that the DXY also made its HVF target. You see how the whole narrative gets pulled together. You have information other people just don't have when you have HVF method, guys. And then when you have the implementing team of HVF method, not just myself, talking about the markets, updating with media like this, shorter versions, longer form versions, voice updates, specific charts, key events. You also have other people that have learnt it, that are highly trained by me, up 3, 4, 5, 6 years in the game, doing webinars with different styles, a little bit slower pace so that you can absorb the material, and you really get the learning, you really get the insights. We've got equities, we've got a car maker that's going to make a dump to the downside in Euroland. All of these things point to recession. You'd love to know it. Beautiful inverted HVF. There will be some trouble coming for that one. But, you know, those setups are all in the premium area. Go to the Market Sniper and you can go and see. So the people that are trading on the long side right now, you can have a sudden pivot, all the risk to the downside, and boom, everything resorts back to resorts back to pain, and it can turn on a dime, but it could also take a while before it turns on a dime. So I think we'll have a short spell during September where everything is fine. October, November, it's ironic, the Vatican wants all their money out of European banks by the end of this month, end of September month. So I'm calling Q4 for major corrective to the downside. It's a known 26th of the 9th. This will be the 7th year, the Shemitah rest year, all of these things. You can make of those things what you will. But I feel it's Q4. Nasty old dump we might face. Bank hacks, European bank failures, bail-ins. Any of these things could be highly probable. You should be deeply cautious and concerned. You should have accounts in multiple jurisdictions completely outside of the Eurozone. You should have foundations. Use the tools that the control structure uses to protect their money, much like Tony Blair and Clinton. We help you do that outside. It's in our reset protocols. And you can find out more about how you can get reset ready for having, especially if you're living in the country of your passport and your birth and your tax. You need your assets outside of that. You are totally captured. You are owned. You're a citizen. Go be the tourist. Be treated better. And tourists are treated better than local citizens. Anyway, so this is peaky on the USD Korean won. It's absolutely natural that it pulls back. It hasn't pulled back chronically, but I think there's scope for it to do quite a bit more to the downside and still to be in a very good place for the blow-off, melt-up, extremist trade that we've called. Also, Hong Kong dollar. My overall feel for this is that the peg will fail and that we are coming up now for a little second dip. I don't believe the second dip goes as far as this one, so I think we're in the second dip rest, and then we will come back up again. So what we need to see is something like this, maybe to around that level, and then we will end up back up and we'll be flat, and then we will have final, and then we go. That would be the model that I would flow. So it's another one of these ascending structures. You had a small little key point of an alert there, which we said it could go, or it'll be a downside pull. Look at this. It's going to want to ease a little bit, and then they're going to keep. They are selling their dollars all the time to buy their own currency that they can actually print. That is such a market intervention. And let me tell you, building these walls on the beach, the ocean washes them away in the end. You can't hold back the tide. So that's the structure. So during this period, dollar weakness, it feels for me a great time for those that were particularly aggressive dollar to have taken off some of those profits, which our community has done. But the long term, you'll be putting those trades back on. The yen also weak. The Asians, in my opinion, are more weak than euro. There's a reason. We've done the euro-yen analysis. In the ugly sister department, the euro is stronger than the yen. We can assure you. We have setups for euro-yen. You can find out about that analysis, join our community on that. So as bad as it is for Euroland, you hear all the news about Europe. You don't hear about how the East is done for. And China, my goodness, the indebtedness there. Thank God they have gold and tons of it. It's but they are going to have to, the value of gold is going to have to go up a lot to counteract that level of debt they created. But there's going to be a whole washout of debt, and they're going to hide it all, and you're going to wear it, and you're going to be ripped off. And the new working poor, that's right. Over here, pullback. Final blow off, pullback. You went it's not a final blow off, I don't mean that. It was a localized high, 144.966. It's not that extreme in volatility. So final blow offs are usually very, very volatile. So again, I didn't mean that. I mean it's a localized high for now. So if you do, you see that? It's not particularly exceptional. So real blow-offs, you get a major move up and a major move suddenly violently down. But I do think that it'll ease for a little bit during this period while the euro has its run up back to the euro. You see that little run and a rally. I think the euro eventually sets up some form of rising wedge and gets set to roll over. How long will it be? I don't know. How long's a piece of string? I can't answer all your questions for you, but I get a whole bunch more clues going than the rest of the people. You can see the Kospi has been pulling back down for a while, but the currency has done worse. So the currency is taking most of the pain of the selling in the stock market, because there's still that inflationary element. Long run, if you generate income as an equity, your Samsung, listen, those products aren't going away. How many of you have a Samsung TV that's spying on you? How many of you have a Samsung phone that's spying on you? They all spy on you, and you have them all. And that's how it works. You're going to have a Samsung fridge that's spying on you. You're going to have a Samsung sexual surrogate that you'll be having sex with that'll be spying on you in a couple of years' time. Who knows? Who knows? Who knows? God knows. Anyway. So we've done a little bit on the Hong Kong dollar. We've done a little bit. Did we do the Chinese yuan? We were starting to get a bit of weakness on that. One to watch actually is the crosses on the USD Swiss franc. So the euro Swiss franc starts to reassert. So the other key element about this, we said the dollar will rest. Having a euro Swiss franc, if you had just a euro USD short and only dollar dominance during this period, all your trades kick you in your backside. However, if you have a euro Swiss franc, for example, that's gone back down. The Swiss franc has been strong, and as you can see here, when the dollar doesn't have its rest, the otherwise strong Swiss franc or commodity currencies, and this is what we talk about beyond milkshake, and that video is still to come out. My overall opinion is that you will get commodity dominance currencies. This is a time for things in supply chain shortages. Physical things that you need are more important. This is the anti-metaverse period. You know, stumbling around in a room with goggles on and having your virtual buddy when you might not even have power, gas, food, etc. This is the anti-metaverse period in terms of practical realities. As much as they are telling you about how they're developing this technology, that metaverse will come back at you. And I'm sure they're going to try to put virtual reality goggles on all of us, strip us of all our assets and tell us how happy we will be in our virtual world of friends. But I can say this much. You know, right now, having access to the lower level of the Maslow's hierarchy of needs, foods, protection, shelter, space, fresh air, energy, going to be far more useful, and you want to be focused on that. So the Swiss franc getting quite a strong pull here against the dollar. USD Swiss franc, you can see it's given up quite a bit. So if you go back to your euro Swiss franc, which is also one of our call trades, which balances up your dollar shorts, you can see the euro has given up ground here. And by the way, this was a 108 right up top here, break over here, and now you can see a right down at 97. Many people, oh, why are it taking so long? Have a look on a monthly chart how this thing has gone for you since there. Wow, what an absolute trade. Down, 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 and this rejection period here is horrific. And super spikes still to come, super spikes still to come. In fact, if you look at the down legs, the overall momentum, the narrative for Europe is just getting worse and worse. There was your broadening structure rally, then you have a down leg like that, and now you have a down leg virtually straight down. 3 down legs. How it started, how it's picked up some momentum, and how it's going right now. You're very much on track with this trade. Very, very much on track with this trade. And poor old Euroland. But, I mean, the yen, probably the weakest. The Korean one, probably the one that'll outperform. When you have the spill, it'll probably have done the most, give or take, over the yen. But the yen has been more consistently giving quicker. But the Korean one will just super spike out in my expectation. So, by the way, you can trade all those below. On the SimpleFX, that's with crypto. You can use USDC or any of the others, stable coins that are accepted, or Bitcoin if you have. We're not big holders of the Bitcoin at the moment, so for obvious reasons. So that's a little bit on that. Rates. What about rates? Well, the key thing about this dollar dominance that many people forget is that they were waiting. With the increase in rates, so was the dollar dominance. But now the dollar is having a little bit of that rest. We're at a key level with 3%. So let's just switch on the levels again here. This is such a key level. Now, it's quite natural that to get above this zone, which was super stimulatory, entirely on emergency. This is the Irma Thurman John Travolta plunged the adrenaline syringe in the heart rather than die resus method. That is the super stimulatory interest rate environment post the events of 08-09 that you ducked under. This is sub 3% on the 10-year yield. It's terrible level. And all this time telling you inflation, we're battling to create inflation 2%, and the assets are hyper overvalued. They're printing QE, everything else. So you are now at the top end of this range of the box and looking to claw back this excessively stimulation era that is now a decade long. You're talking about an event of 2010 here that probably broke 2011, and we are mostly through 2022. It's unbelievable, but we'll be 2023. By the way, on that point, we will be doing a marathon like we did in 2020 with all the best guests, Lynn Alden, George Gammon, lots of other exciting, Danielle DiMartino Booth, back to back, one after another, talking about the key markets and absolutely loving it and ripping it non-stop on that day. 11-11-22. You will not forget the number. 11 plus 11 equals 22. The way and the way forward, the world, the reset world of 2023. That is the year. We're going to go in Q4 of this year into Q1 of next year. Gents and ladies, you're going to see things you never thought would happen. There are decades where nothing happens, and then there are days where decades happen, and you are coming into it. We will have the best guests, and we're going to have quite a few of them. I will be mentioning more of the names as we confirm. High-end top gun guys, and we're going to do that marathon. Don't forget that event coming soon, 11-11-22. But the point back to this is that what is actually going down here is that we're going to consolidate for a while before we break to new highs. Higher interest rates are assured. Why? Because that bloody inflation, once you've let it become a teenager, is an absolute honey badger. It attacks you, and you can't stop it. And it is nuggety and tough as hell. You can barely hurt it, and it's hell-bent on hurting you. It's aggressive. And you've thrown it away after it's attacked you. It falls down, rolls back on its feet, and it falls straight for your testicles and wants to sink its teeth into the plums. And literally you have to put a bullet in its head to kill it, and you kill everything with it. And that's where you are with inflation. So you think you've beaten it, and then it suddenly explodes again, because people are conditioned for an escalation in pricing. They bring forward purchases, especially when you add supply chain shortages, bifurcation of the global supply chain, Biden bringing in now these chip sanctions on China, etc. More and more stuff just breaking the world into pieces and parts. So they are the leadership of our times, the absolute Caligulas of the world, designed to break it. They have been put in there to mock you and to break it, and it is by intent, it is not by accident. So getting past this interest rate level, what you'll notice is that even though the dollar's down, the rates are stubbornly high. Now, I'm expecting a pullback out of this channel. I do expect it, but they are stubbornly high. So even if you get down to somewhere here and then your marginally lower lows, I don't know how much further. Will we get below 3 one more time? It's also possible. It could look like that. None of these are active forecasts, but what I can tell you is that you've gone very, very firmly towards the previous high. It was up there at 3.5%, and this is a continuation pattern. The default is always assume continuation, not reversal. This is what serves you. We had a real trend change event. The rate of increase that came out of the extremity of what they did during March 2020, you all know the name that may not be mentioned, and the extreme medical, you were right down here on a wick. This absolutely trend change event, the final capitulation in a rates 40-year bull market for bonds, now bull market for yield, because this debt is absolutely losing value. Anybody with any head will not long-term hold debt right now in what is a double-digit inflation environment that is grossly understated by every governmental statistic. Why on earth would you hold and earn 3.29%? You're on 3.298% in an environment that money is declared losing 10% by your statistics, but is probably closer to 18%. Why on earth would you do that when you can buy gold and you will still have that gold ounce in 10 years' time? When you can buy land, productive land that can do farming and have a farm manager, and that will still be productive in 10 years' time. These are the things that you need to think about. So debt is being deflated with negative real interest rates, and these will need to go up just to not be as extreme negative real rates as they currently are. And they're going to continue to do demand destroying events so that there is such a downdraft on demand to try kill that honey badger that's going for your testicles, that'll only really swat it off for a few minutes before he dusts himself off and comes at you again. And that demand destroying activity is what will crash the stock markets, and we'll see them accumulate all that overpriced real estate on the cheap, all those priced equities on the cheap. We will own everything and you will be unhappy. And that is the truth of the matter. In that statement, you will own nothing and be happy, is the truth. We are going to strip you of your assets, because the corollary of that is somebody else now owns what you used to own. Who is it? And surely he's more happy for owning your valuable stuff now that you are a rental, permanently extracted again citizen. That is the truth of the situation, friends. That is the truth of the situation. Pharmaceutically induced happiness, where you get uniformity, Bolshevik communism. So what about oils? You can see they've come down and they will stop coming down. The bid under oils is coming on the weakness now of the dollar. So you're seeing a little bit of a hammer now showing up here. And all the people that are assuming $60 back down again, let me say this much. That will only come when they do the demand destroying bank hack, lockdown, freedom of movement closure, watermelon communism, green lockdown, event. That's when you may see it. In this current environment, before they've played their mega card of destruction, demand destruction, you're actually getting a bid under oil on the softness on the dollar. And you would expect to see at a critical place the gold also get a small bid. This is terrible downward. And we call this double top. We've got it in our community. And we see the paper price, very important because we are gold bulls, very important paper price. In that demand destroying event, we see you're going to get something like that. But first, at this key level that is so interesting and intricate, round about the 1700 mark here, where you're getting the small bid, first a little bounce before you come back lean and then do your spiller on the paper price down to there. You can expect premiums to be real expensive for precious metals at that point, and you should grab all that you can anyway in the precious metals environment. But we do see this demand destroying event coming that will see everyone rush for liquidity. And guess what? If you've got no money in your banks anymore, you will be a forced seller of gold, and they will take it off you on the cheap. So make sure you have cash, multitude of bank accounts across the globe. Expect many of them to be attacked. Turn lots of it into cash. Put lots of it already now into metals. Ignore the paper price that it'll go down. Have physical things like property. Make sure you have invested in extra deep freezers. Why? I'm surrounded in a nation by organic game that hasn't been fed pharmaceuticals, red meat till kingdom come, a farmer nation, etc., etc., etc. Make sure you're close to supply chain, power downs, well-trained diesel generators all over the place, used to lockdowns, not lockdowns, power downs, grid downs, and for coping with that, batteries, torches for night, everything like that. Be prepared for things you haven't been prepared for before. Okay, but this was all about the dollar. This was all about the dollar retracing a little bit, and this is all about the fact that we predicted Bitcoin would go up, and that we're not interested in trading it up, regardless how much people are making on the upside. We don't know how long it will be, and it could turn suddenly, and we want to short it. We want to short it, and the equities. How the equities doing, you can see in the last few days that as the dollar softened, that the equities have been getting a bid. So if we just wipe the face here and we go back out of the monthly and we show you this, you can see it's this week and last week. There you go, 4 days odd that you've traded up on the Dow after a fairly strong, robust selling period. You've traded 3 days up on the SPY. The VIX is calming down. What me worry, everything is fine. Inflation is coming down, supposedly, and the NASDAQ 3 days is up. So you can expect that. What do you get? Bitcoin is getting a rally, and everybody's super excited. So yes, be aware, be concerned about the forthcoming demand killing event. We are positioned short for that, and we don't trade these interim swings because it's a bad habit. Could I have made money long going heavily long Bitcoin? I was almost assured it was going to rally from that relative low too. We shared the image here. Might take a while for me to find it. Over here we called it long at 18,740. You could have got in nice and size in. Actually, it spiked fairly strong on Bitcoin over here. You can see it. This is not a crypto sniper market channel, so I'm not going to do a deep dive, but you went from 18 to 22. That's a quick foreground. And literally, I think we might have called the absolute low there. Let's just have a look at that. What was the low? 18,549. And it was at about 18,740 that we were saying going low, and I think that 18,549 had already been done. So you could have gone in and taken, $3.5 grand to the upside, and it's pretty strong at the moment. But I wouldn't trust it too much beyond. We will see. I don't think it. Our first scenario is that we don't believe it crosses that high. If it does, were it to, then instead of creating an inverted HVF structure, it's more likely to create a rising wedge. Then you will have a longer period of dollar weakness, and you might get a higher high, and then you'll get down leg, and then you'll get a higher high again until it's ready to roll over. That would mean we drag more into the Q1 of next year for this to all play out, or very much late this year. So we will see. If it tops out before, and we are more like this, so we go blue scenario, for example, and then it comes down, then we are more likely that in Q4 that this all materializes and that we go to the downside. So we will see. We will see the scale of this. The market will guide us, but continuation is to be expected. And by the way, for my friends here who are the Bitcoin bulls, 17.5 to 25. It's a nasty move. You're talking about the better part of 7.5 grand, and I would expect that to be predicted down from around 20,000. So 7.5 grand from 7,000. You're going to run the 15. If that were to happen, you'll probably end up at 12s, 12.5s, etc. It could be ugly if this inverted scenario occurs. If we were on the pink, the rising wedge, we don't get targets. B, it will come later. And it might not be as bad or for the Bitcoin guys. So a lot of things to rally right now. Do not trust them. There is a demand destroying event that could be brutal and come out of the blue. Remember how it came for the likes of COVID. Some of the best markets to look at for that is actually the equity markets. The rate of fall of those equity markets once it was clear what was going down there was absolutely extreme, as it was also for interest rates, by the way. See how those fell. Look at that absolute pee off the roof down, smash, rates down, bond valuations obviously up, and for the equity markets it was unfortunately a spiller, an absolute thriller. You can see it right down there. That was just brutal. And I fear these events. Remember, these orchestrators that want to take your assets off you, they create bigger and bigger crises and bigger crashes. They don't get any smaller. So be warned, be warned, be warned. Risks to the downside. Rallies, be cautious. And beware the people saying there's so much cash sitting on the sidelines. It's sitting there for a reason. And that's because people are pretty afraid. Okay, with that, I love you and leave you. The dollar is now made its target for the upside HVF, the dollar index, and as a result, we are calling for risk on for a period, and it's not risk on that we will be participating to the long side on ourselves. We will be awaiting to put on fresh shorts. Good luck, non-advisory, of course. Start your reset prep. Freezers, food, basics. Back to basics, my friends. Power, backup sources, generators, battery lamps, wind-up radios. These are the smart man's tools, not Rolexes and Porsche Cayennes. It's now time to be smart. Get through land, space, contacts, everything along those lines. In Switzerland, I'll leave you with this thought. I think we're still on that one. The Swiss were talking, there were posters being shared about ratting your neighbors out who might be heating their houses more than 19 degrees. Now, I don't know if that was intentional or whether it was just some people making up a bit of a ruse. Bolshevik communism was built on Stasi mentality, where you got good points for crabs pulling down the crabs that are escaping the buckets. Self-policing. This is Bolshevik communism, when people are incentivizing people to do rat out, tell on your mates. Get with a community that have your own back. This is going to be a trend that continues to come in communism times, my friends. Okay, that's it from me. We appreciate you hearing us. And I think this continues in time, but first we rest. So that's the message. Bye for now, and we'll talk to you again soon. Bye.